Hey, this is Matt from InvestiQuant. Today is Thursday, October 21, 2021. Yesterday, the markets closed strong once again. We had another close higher, which is a higher close every day so far this week. We've got several green candles in a row as we move back towards the all-time highs. We didn't quite make it there yesterday, but we're getting very close. So we're going to look at a pattern that looks at what has happened historically when you get up around those all-time highs or 52-week highs, but not quite to them. So let me go ahead and set this up, and I'll show you how to describe that using Discover. We'll use a setup that's based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, the overnight session is trading lower, so we're going to add that piece of information to the test by going to the opening filters, gap direction, and gap down. We're currently trading right around yesterday's low, so that might be something you want to add to this when we get closer to the open. We know where we're going to be, but since I have no idea if we'll be in range or out of range right now, I'm going to leave those two scenarios out of this test. You could do open in range as a gap down or open below the prior day low to get a little bit more specific. But for right now, I'm just going to use gap down. Next, I'm going to go into the price patterns. And I'm going to say that yesterday closed at a 20-day high. So I'm going to go to this new highs section. I'm going to hit equals next to day after 20-day high. But we did not close up at the 52-week high. We did not close at the all-time high. So I'm also going to add that to this study. I'm going to say we closed at a 20-day high, but not a 52-week high. So if I scroll down just a little bit, I can see day after a 52-week high close. I'm going to hit the minus sign next to that. When you hit the minus sign next to it, it's going to make it an exception. So it closed at a 22-day high, but it did not close at a 52-week high. So we're up close, but not quite there. All right, next I'm going to go into the indicators library. I'm going to put us above a 200-day simple moving average. Since we had a 20-day high, I don't need to add that 10. And now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap down, when the prior day closed at a 20-day high, but it did not close at a 52-week high. So it's trading up near highs, but not quite there yet. Historically, we've got 188 samples in the S&P for this pattern. We've got 193 in the NASDAQ, 210 for the Dow, 187 for the Russell. So good sample sizes everywhere. S&P coming in at 61% of these have put in a green candlestick after that pattern. The NASDAQ has a 58% win rate on that. We're 62 on the Dow and 52 on the Russell. So 3 of the 4 are favored on this pattern as far as win rates go. If we look at the average moves, the average win for the S&P is larger than the average loss. That is also the case with the NASDAQ. The Dow has a larger average loss, and the Russell also has a larger average loss. So the average moves are mixed. We've got 2 that are bigger to the upside, 2 that are bigger to the downside, and the win rates are skewing towards the upside. So historically speaking, this has favored the upside a little bit more often than not. Hopefully you found that helpful. Good luck today, and we will see you next time.